For those serious about becoming successful, consistently profitable options traders, now is the time to build skills in technical analysis, market analysis, and applied volatility to get those results. We have multiple memberships, starting with our Go membership that teaches rules-based trading and our Pro membership that teaches more subjective trading. For more information, go to lockeinyoursuccess.com/memberships.
We are having a market outlook open house, and this open house is available to anybody, our Go members and the general public. You'll find that the market outlook is applicable to any type of trading, whether that be short-term, long-term, directional, or non-directional. We do focus on some concepts that are non-directional, which you will not see anywhere else in the industry. Most market outlook type of webinars are geared toward directional traders. This one has a lot of great information on how to utilize our market analysis techniques to improve your income trading results and your consistency over time. But our market outlook is not just me going in and giving my thoughts about what's going to happen in the near future. It's about teaching you a series of lessons that helps you gain the understanding of the patterns in the marketplace, which, by the way, the patterns in the marketplace represent the attitudes of the traders and where they're placing their money and where they're placing their bets. And by understanding these patterns, being able to recognize them and understand them, you can gain a good understanding of what's going on in the market movement, what the future movement is most likely to be like, what new information might come into the marketplace that could change the way the traders are looking at things, and from there allow you to make your own decisions and judgments on where the market's likely to go. Why is this so important? It's so important because when we do that, we can drastically increase our probability of having a winning trade and setting up trading strategies that give us very high reward for a relatively small amount of risk that are extremely high probability, meaning that we can gain bigger profits more consistently over time. And that's really what it's all about. We're supposed to be traders here, and traders understand what's going on in the marketplace, and we're teaching you to do that. And again, coupled with our Go membership and our Pro membership, we teach you to apply these trading strategies in a way where you become much more successful as a trader and adaptable as things change. Technicals, I'm talking about your support and resistance levels, your price cycles, your in the varying time frames, your trend lines, trend direction, all that type of stuff. We talk technicals. What's the price action doing, basically? When we take a look at this, if we talk about last week with the SPX, my thought, and we were here, by the way, right? So this is, let's see, Friday, Thursday, Wednesday, Tuesday, Monday. So we were basically here on this red candle right in here. So let's zoom in on that. We were on this red candle on Monday, and my thought was, okay, we have an upper and lower range that the sideways range that the market's in right now. So if you saw last open house, if you were at the last open house, for example, we talked about the Russell being in a split range, right? We have an upper sideways range and a lower sideways range. In the meantime, the SPX kind of did the same thing. It split into an upper sideways range and a lower sideways range with a very sloppy midpoint. But we talked about the SPX is trading in the lower half of our sideways range, and that we believed that this area right here, 4470, was a very important technical point. Now, that said, even if the market goes up, we're still in slop here, all the way up into even this range now, 4630 really, as far as slop goes. But this breakdown here on this pattern was actually fairly important. So our expectations with a breakdown on this pattern here is that the market go down to the SPX here. At least price pattern target is going to give us about 4,300. So that would be like a minimal breakdown. But we broke down under that on a shorter term time frame. When we go back and we look out at our longer term time frames, realistically, we're underneath our important levels. We're underneath this level here, we're underneath this level here. That being the case, I have to be bearish in general direction on the SPX. Now, when I say bearish in general direction, I don't mean necessarily tomorrow that the market's going to go down. I mean that over the next week, over the next couple of weeks, we should see a continuation down in the marketplace. The question becomes, and if I was in a precise technical situation, right? If the support and resistance level were really crisp and clean and identified in many different ways. So when we look at technicals, we're looking at support and resistance levels. We look at moving averages. We're looking at Fibonacci levels. Now all that stuff you have on different time frames also, right? So when everything's lining up, then we can be very precise about direction maybe tomorrow. For example, we get to certain points, I can tell you very precisely direction tomorrow. When the technicals are like this, you cannot really say that with much precision. So the question becomes is when do we switch opinion to say, oh, I'm not bearish anymore? Because what happened the very next day is, well, we stayed pretty much stable here the following day, but the next day we had what appeared to be a really large up move. In fact, it was a larger daily range than what we've been putting in here. So some people may have gotten a little jumpy with that, maybe adjusted ahead of time. But one of the things you should realize, again, is this changes a little bit if you're trading a smaller time frame. If you're trading a 10-day trade, a 5-day trade, a 1-day trade, or whatever, you should be looking at smaller time frames. You should be looking at the hourlies, for example. And we're actually going to take a look at the hourlies. If you're 15, 30 days, 90, anything longer than that, then you can come into the dailies. Anyway, here, this big up move spooked some people into thinking that, oh, well, now the market's going up. But that's just what we call short-term drama, right? So we have this short-term drama that plays out with these large price moves during the day. But the question has to get back to, does this change the basis of my opinion that I started with? And the answer is no. Why am I bearish on this day? I'm bearish on this day because we broke down under this level and we're still under that level. So we get an up move. That doesn't mean anything. Now, if we start breaking up into here, like this day here, which we'll talk about in a minute on Thursday, that can change our mind. That would be in the context of, oh, that I didn't have this big resistance point up here. So the reality is in this particular case, because of the resistance that we have all up in here, this really big sloppy resistance zone, the reality is the market can really shift anywhere. But I see the important points that we pointed out here weeks ago here at 45.25 and 44.70-ish. But that doesn't change our opinion. This move on Wednesday doesn't change our opinion. This move on Thursday after the close certainly doesn't change our opinion. One of the things I want to do is I want to take a look at this on the hourly and just look at this in a bit of a different context.